Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So, two-part video today. First part, we're going to be doing a 1,000 subscriber giveaway, just to say thank you from me to everyone who's supported the channel so far and all that kind of stuff. So we're going to be doing a little bit of a giveaway. And the second part of the video, we're going to be talking about one of the newer Berkshire Hathaway money managers by the name of Ted Weschler. So recently came across an article disclosing some of Ted's actual returns in the stock market and how he actually outperformed Berkshire Hathaway as well. So very cool article, and there's a few takeaways for myself personally from that. So I want to run you all through that, but that's essentially the goal for today's video. So let's get into it. Alright, so let's get into part one of this video, which is the 1,000 subscriber giveaway. And essentially I'm going to be giving away a couple of the books on the shelf. So not the exact copies of the books on the shelf, but I'm going to quickly show you all the books that I have got on here. I'm going to let you pick one, and then I'm going to pick a couple of winners, buy another copy of it, and send it out to you. That's basically the plan. And we're going to give away two. We're going to pick two winners. So we're going to pick one from New Zealand because I know that makes up a large percentage of the audience, and we're going to pick one international viewer. So if you're from Australia or the US or some other country outside of New Zealand, you can go on the draw happily as well. So I'm going to put up a quick photo here, just showing you all of the books that I've got, and I'll very quickly just talk through them and then let you know what you need to do to enter. Okay, so we have a few classics. We've got The Intelligent Investor by Ben Graham, Rich Dad Poor Dad by Robert Kiyosaki, Money Master the Game by Tony Robbins, The Education of a Value Investor by Guy Spier, The Dando Investor by Monish Pabrai, Rule 1 by Phil Town, Payback Time by Phil Town, Invested by Phil Town and Danielle Town, Tools of Titans by Tim Ferriss, One Up on Wall Street by Peter Lynch, Damn Right by Janet Lowe, Common Stocks and Uncommon Profits by Phil Fisher, Ben Graham on Investing by Janet Lowe, The Art of Living by Epictetus, How to Win Friends and Influence People by Dale Carnegie, Titan by Ron Chernow, and The 4-Hour Workweek by Tim Ferriss. Alright, so those are the books you can potentially win. In order to enter, there's a couple of things you have to do. So first, hit like on the video. I'm sure you have already. If you haven't, do that now. Second thing you're going to have to do is leave a comment. So your comment is going to have to say three different things. So firstly, what country are you from? So are you from New Zealand, or are you from Australia, or wherever it is? Second, give me your favorite Warren Buffett quote. So I'm a better businessman because I'm an investor, and I'm a better investor because I'm a businessman, or whatever your favorite Buffett quote is. Drop that one down there. And the third thing you'll have to leave in your comment is which book of those on my bookshelf do you want to win. So an example comment might be something like, I'm from New Zealand, my favorite Buffett quote is, rule number 1, don't lose money. Rule number 2, don't forget rule number 1. And I want to read The Education of a Value Investor by Guy Spier. That might be an example comment. So drop those three things in a comment down below if you want to be in the draw. In the start of the next video, I will pick some winners. I'll then get you to contact me and all that kind of stuff, and then I will send you out a book. So again, just a small thanks from me to you for joining along with the channel. So that's the giveaway. Definitely enter down below. We don't have a huge amount of comments usually on these videos, so there's a pretty high percentage chance of winning on this one. So drop that down below. But for now, let's get into the video and talk about Ted Weschler. So let's get into part 2 of the video, and this one is all about Ted Weschler. So if you don't know, Ted Weschler is one of two money managers that work alongside Warren Buffett at Berkshire Hathaway. So Ted Weschler, and Todd Combs is the other guy that's sort of one of the guys in the office, as Warren Buffett often describes them. They each manage about $13-ish billion is my understanding, and they are very, very likely to be basically the successors of Warren Buffett after he passes away or retires. Probably passing away is more likely than him retiring at this point. They are the likely successors to take over the money management, redeploying of capital sort of side of the business. So they're probably not going to be the CEO or anything like that. At the moment, my money's on Greg Abel for that one at the minute, who manages Berkshire Hathaway Energy, but that's all wild speculation. So don't take my word on what's actually going to happen with that one. So very interesting to see the dynamic here set up with Ted and Todd working alongside Warren. And I thought it would be very interesting to do a little bit of digging and see if I can track down what their returns have actually been before joining Berkshire Hathaway. And I managed to do that relatively quickly for Ted Weschler. I've seen some much less impressive figures for Todd in the articles I've found, but I need to do more digging there, so I'm not going to get into that today because I've heard Charlie Munger talk about some very different figures in the past before. But we're going to talk through Ted Weschler, and this has actually already prompted one change for me personally in terms of how I look at things like Berkshire Hathaway 13Fs, like we looked at in the last video, and it's quite a cool takeaway, and it shows that Berkshire Hathaway is likely in very good hands in terms of how that money is going to be redeployed that the businesses continue to make after Warren's gone as well. So let's get into the main takeaways of the video, and we will go from there. So there's really two interesting things out of this article that I didn't really know about Ted Weschler, and we'll even add in a bonus third one, I think, as well, which has just come to mind as well. So the first one is that Ted Weschler actually really met Warren Buffett more personally after bidding on charity lunches. So every year Warren Buffett does this charity lunch where he basically auctions himself off for someone to sit down and have lunch with him. And he donates that money to charity every year. It's really the reason why, or at least one of the reasons outside of great investments, why the likes of Mohnish Pabrai and Guy Spier actually became a little bit more famous, is because they paid hundreds of thousands, if not millions of dollars, and that's continuing to happen with other people in later years, to have lunch and sit down with Warren Buffett and really pick his brain on investments and life and raising children and all sorts of different things. And that's really how Ted Weschler met Warren Buffett more personally as well. So he actually won the Buffett lunch 2 years in a row, which is very impressive, paid a couple of $1 million or so over those 2 years to have lunch with Warren Buffett 2 years running. So that's the first thing. But the thing I really want to dive into this video, outside of the winning the lunches and the fact that apparently Ted has not missed a day of running in 36 years because he really loves to run. Outside of that, I want to dive into the actual returns that Ted has generated as an investor. So let's dive into that. So according to this article, Ted had his own hedge fund that he started in the year 2000 by the name of Peninsula Capital Advisors. It was about a $2 billion fund, and he had some insanely good returns through this period. So this period generally was a really, really good one for value investors. It was at a time where the tech stocks were booming and just about to bust, and there were a lot of tech names that people were selling off. Like, people were literally getting up at Berkshire Hathaway meetings and saying, "Warren, you've lost it. I'm selling all my shares and I'm putting it in pets.com," or one of these famous internet companies that just went basically to zero, or at least down 90+%. So it was a really good time for value investors because there was a lot of kind of cheap stocks around that people that weren't glamorous and people didn't want to be in, and it created a lot of opportunity over the following kind of decade to really have those businesses appreciate back up to intrinsic value and continue to grow and do well and all that sort of thing. So in terms of the returns, I've just got some of the numbers in front of me here. Peninsula's $2 billion fund returned 1,236% between 2000 and 2011. That is insane. So 1,236%, just for a comparison, Berkshire Hathaway in that same period of time was up 146%. So he has massively outperformed Berkshire Hathaway through that period. And if we convert that to sort of an annual rate of return, we know that in his early days, Warren Buffett did about 29% per year. Out over his full career with Berkshire Hathaway now, he's right around 20% per year, and that rate of return has slowly gone down over time. Basically, as he's gotten larger and larger and his investment universe has sort of shrunk into a small number of very large companies. But if we break that down into an annual rate of return, and again, I'll put a screenshot up here of what that return exactly looks like. He basically turned every $1 in that fund into about $12.36 over an 11-year period. And if we run the compound interest calculator on that, that is a 25.68% return, north of 25% a year. If you don't think 25% a year is an insane return, I don't know what kind of money you're making, but maybe you should start a hedge fund as well. 25% is ridiculous. If you can compound money at 25% for any appreciable period of time, if we just extend that out to 30 years as an example, that would turn $1 into $950. If we gave Ted Weschler 100 grand, he would have turned that into 95 million if he could continue that rate of return over a 30-year period. So insane returns. A couple of things I really got out of learning that. Firstly, Berkshire's probably going to be in very good hands. Warren's assured us of that, but this really kind of locked it in for me. And the second thing is I need to pay more attention to the Berkshire Hathaway 13Fs. So you'll see that in the most recent video I did, I went through all the 13Fs. I looked at Berkshire Hathaway and I sort of said, there's not really any big changes here. And that's probably true in Warren Buffett's case, where he's managing huge money and he has transactions fairly infrequently. But I really think I'm going to start diving down more into the weeds of the Berkshire Hathaway portfolio and focusing on some of those smaller positions that are likely to be Ted and Todd, and doing a bit more digging. Their investment universe is larger, they've got more opportunity, they're managing smaller amounts of money, and I obviously don't have the multi-$100 billion investment portfolio holding me back like Warren does. So duh, dummy, it makes sense to look at, Ted and Todd as well. So I'm going to start doing that. As I say, I'll link the article down below. Enter the giveaway, that way you may win a book, and that's really all I've got for this one today. So I hope you enjoyed it. If you did, hit like, hit subscribe, and I'll see you in the next one. Cheers.